Today, we're going to talk about the hidden economic forces that draw the map of our world. That invisible hand that decides where a skyscraper goes, where a farm starts, and where we just let the wilderness be.
Okay, so let's really get into this. Have you ever just looked at a city and wondered, why? Why is it all laid out like this? It might seem chaotic, but there's actually a powerful economic logic behind it all. We're going to unpack that logic, and believe it or not, it all starts with one really simple, kind of beautiful idea.
So just imagine for a second a perfect theoretical world. In this world, the free market is like this giant, super smart sorting machine, and its only job? To put every single piece of land to its absolute most valuable use.
And the rule that runs this whole machine is dead simple. Land goes to whoever is willing to pay the most for it. This whole thing is driven by a concept economists call the bid-rent function, and it really all boils down to those three magic words: location, location, location.
Okay, and here's where it gets really interesting. It's all about a trade-off. See, the closer you are to the center of everything, the market, the offices, the less you spend on transportation. And because you're saving all that cash on gas and time, you can afford to bid more for the land itself. The farther out you go, well, the exact opposite is true. And you can literally see how this one rule creates the world we know. Businesses and people who want apartments, they bid the highest for that central land to cut down on commutes. Farmers, they bid for that next ring out. The land's cheaper, but they're still close enough to get their crops to the city. In the wilderness, well, it gets what's left over. The land that's too far away for anyone else to make a profit. So in theory, you end up with this perfectly organized, beautifully efficient landscape. It's a well-oiled machine. But if it's so perfect, then why do we sit in traffic for hours? Why do we have endless urban sprawl? And why are there sometimes polluting factories right next to where our kids play? The real world, as you know, is a whole lot messier. So yeah, if the theory is so clean, why is reality so messy? Well, it's because that perfect economic machine has some pretty serious glitches. That simple model we just talked about, it doesn't account for a ton of real-world problems that just throw a wrench in the works. And these are the big ones. These are the main culprits for why the map of our world often looks less like a neat blueprint and more like, well, a bit of a mess. Each one of these messes with that simple bid-rent model we just saw. So let's take sprawl and leapfrogging. This is when developers just jump over perfectly good empty land near a city to build way, way out in the middle of nowhere. It's not just ugly, it creates huge problems. It means we all have to drive further, burn more gas, and that creates more pollution for everyone. And a lot of this comes down to one simple question. Who's paying for all the new roads and sewers and power lines to get to that new neighborhood? See, if the developer has to pay for it, that cost gets baked into the price of the house. That makes those faraway houses more expensive, which discourages sprawl. But if all the taxpayers in the city have to chip in, then the true cost is hidden and we end up accidentally encouraging developers to build farther and farther out. But the glitches go even deeper than just who pays for the roads. The market really struggles when what you do on your property affects the value of your neighbor's property, for better or for worse. Economists have a name for this: externalities. So a negative externality is basically a hidden cost. The classic example is a factory. It makes stuff, it makes a profit. But maybe its pollution lowers the air quality for the whole neighborhood and makes everyone else's house worth less. The factory owner doesn't pay for that damage, right? So the market can't see it, and that leads to a bad deal for the whole community. But what about the other side of that coin? As this quote gets at, sometimes what you do with your land creates benefits that everyone gets to enjoy. And that's a positive externality, a hidden benefit. Think about a farmer who keeps up this beautiful, rolling, open space. We all get to enjoy that view, but the farmer doesn't get a check in the mail for it. Because the market has no way to put a price tag on that beauty, it gets undervalued. And that creates this huge risk that will pave over that green space for more development, even if keeping it open would have been better for everyone in the long run. Now, this whole battle between private profit and public good, it isn't just about your backyard or the farm down the road. The exact same economic logic applies to how we manage some of our most critical natural resources. Let's take a quick look at forests and fisheries. And what we find here is this really fascinating, kind of counterintuitive idea. For both forests and fish, the smartest, most efficient way to manage them is almost never to just take the absolute maximum amount you can. It's about finding a totally different kind of sweet spot.
Okay, think of a forest as a financial investment. When the trees are young, they grow super fast. That's a great rate of return. But as they get older, their growth slows way down. The smartest time to harvest economically is when the tree's growth rate drops to the same level as the interest rate you could get just by putting your money in a bank. Waiting any longer is just like leaving your cash in a lousy savings account.
Fisheries are even wilder. You've probably heard of maximum sustainable yield. That's the most fish you can catch every year without the population crashing. But here's the thing, it's not the most efficient level. Why not? Well, because as the fish population gets smaller, it costs a lot more in fuel and time to catch each one. Efficiency says you should stop fishing at the point where the cost of catching that next fish is more than what you'd get for selling it. So where does this all leave us? We've seen how the market's invisible hand can create a really logical, ordered world. But we've also seen where that hand gets clumsy, where it needs a little bit of a nudge to deal with all the messiness of real life.
So here's the bottom line. Markets are powerful for sure, but they have major blind spots. They're not good at seeing those hidden costs like pollution or the hidden benefits like a beautiful view. And when we're talking about our natural resources, being efficient means thinking about long-term value, not just how much stuff we can grab right now. And really understanding these forces, that's the first step toward creating smarter policies that can guide the market to better results for all of us.
The way our cities are built, the health of our oceans and forests, none of this is an accident. It's the results of millions of tiny economic choices. But now that we know how those choices work, we actually have the power to influence them for the better. And that's the question we're left with. What choices are we going to make? Thanks for joining this explainer.